Good evening, traders. This is going to be a post FOMC review, and I'm going to start with S&P, and then we'll have a look at GU, and we're going to have a quick look first at what I shared in my communities tab today. I'm going to post that chart here, if you can see it. So I said that yesterday we already swept by the buy side liquidity above that high. London might have made the high of the day, so potentially looking for price to trade towards the downside. We have some sell side liquidity in terms of yesterday's low, and then potentially looking for price to trade lower. So our daily buyers was looking for shorts. So let's first look at pre-FOMC. So just seeing that yesterday already swept the previous daily high. We had a breakdown, breaking structure. So, and you can see the pattern forming here. We had a high, higher high, breaking market structure. So there is your pattern. Then potentially what we could expect again is a pull up to create that right shoulder, head, left shoulder, right shoulder, and then a continuation lower. But that's now besides the point. That is what happened right here. You can see left head, right shoulder. Yes, I still pay attention to retail patterns. It's not a sin. We still look at it. SMC, what people make it out to be, um, isn't all just all that. There's more to it. Anyway, so let's have a quick look. Okay, so this morning, London session traded above this short-term buy-side liquidity, and then we had a break towards the downside. So if price taken out the buy-side liquidity, then obviously we're looking for the sell-side liquidity. And I think I did mention it in the video this morning. We have a low, and a low, all sell-side liquidity resting below these lows. Use the red one. That's sell-side liquidity, and then you get the idea. Sell-side liquidity, sell-side liquidity. So for this morning, this afternoon straight, so we traded towards the upside, and then let's quickly look if there was a shorting opportunity. So we traded above it. Then I think this might be classified as a structure break. Not the cleanest, so nothing really clean happening in here. So it wasn't super clear. So we did create this little block. We traded back up into it, and we see the price trade lower. Then what time was this? Around the lunchtime, I think we had another run on the buy side liquidity. So again, we saw price trade above the buy side liquidity, and then this is where the magic started happening. So then we created the structure brick towards the downside. Well, we've had already multiple ones, but then this one as well. And this is where I started looking at price action more in detail. So if you look at the 1 minute, let's quickly find our place. So right over here, we traded back up into the imbalance. That's good. We had a push back, and we had a trying again to go higher, but there we had a failure to go higher. So we had a lower high forming instead of a higher high. If the trend is bullish, we're going to have a higher high. But if it's bearish, we're going to see price creating a lower high. And we create a lower high, and then we created another structure break, and then price left this beautiful zone. And that is then a really good opportunity for shorts. Targeting the sell side liquidity. That's all you need. So sell side liquidity, that previous daily low, marked out all the way towards the left. That is then the objective. Trading towards the downside. Now, the idea is to see price trade lower. So let's quickly look at what happened then with FOMC. Okay, think of highs and lows as liquidity. So now, what did all of London and New York do? It traded lower, and it left behind buy side liquidity above all these highs. So there's our buy side liquidity, and then we had another one. So now, where is all the liquidity? Resting above all these highs. What do we see with FOMC? Price pushing towards the upside, taking out all of this buy side liquidity, and also then subsequently creating that right shoulder. I'm just joking. I'm not actively looking at retail patterns, but I do spot them or notice that they do form. So there's merit to it. Obviously, it it's pushing up into a premium, reacting off of imbalance. So there's definitely more to the story. But nonetheless, we trade up, take out all the sellers, everyone that sold, they were all taken out. Now, we try not to trade FOMC because it could be seen as a gamble, but we do analyze it and see we have ideas and things to do. Um, some people in the community spotted everything that I'm showing you as well now. So wonderful to see that as well. Shout out to you guys. So what happened now? We see price swept previous buy side liquidity. So we've taken out. This is very interesting. So you see price sweep the buy side liquidity of this leg towards the downside. Then it creates a new high, pulls back. Now there's more buy side liquidity resting above that high, and then price just wants to make sure everything is in order. It takes it out, and then we see a strong break, structure break towards the downside. So we're gonna have a look at that right now. If we just quickly delete this, like so. Let's have a quick look then at the 3 minute time frame. Sorry, 2 minutes shows it the best. So we see relatively equal highs. Price takes it out, makes a high, and then kind of does the same thing again, just to like kind of make sure everything is clean and clear. And then we have a massive structure break towards downside, and then we see price creating this beautiful block, trades to that block, and then this would have been the trade idea. Big stop loss, but it is FOMC, so what do you expect? And just targeting this new sell side liquidity below. That is then how I would have traded FOMC. So I'm not trading FOMC, just observing and playing around with it. But notice the pattern that we created, exactly the same that we did on the higher time frame. So this is what is meant by fractal, the fractal nature of the market. So on the higher time frames, we had this pattern forming. We had a high, price created a higher high, then broke structure towards the downside, and then we're looking for that return. This looks like a head and shoulders again. So that's where head and shoulders come from smart money concepts. That's where head and shoulders come from. Okay, so again, same thing. We sweep the buy side liquidity above that high. Price then impulsively breaks structure towards the downside, and then we return to the block that caused that break. Everyone knows this pattern. I've heard some people call it a Quasimodo. I'm not sure. I've never been taught Quasimodo. So if it's that, then it is, or you can just call it a head and shoulders, or you can just call it a stop hunt, break in market structure, return to order block. That's the other definition or thing that people call it. But anyway, this pattern that we just saw in the high time frames happening on lower time frames again. So try to only spot that pattern. I might make a video going in more detail and showing examples, but just try to spot that pattern and then you will increase your win rate 100%. You will become a millionaire. I'm just joking. If you've watched this long, then hopefully you'll laugh at my late night jokes. And that is FOMC for you, and that's S&P in a nutshell. So let's have a quick look at you. You see this area we marked this morning, came to it, just tagged it out, and then it dropped towards downside. I haven't looked at GU at all today. You can see how messy it is. It was just consolidation, messy price action towards the downside, push up, push down. I'm not gonna be trading this pair for a little bit. Yes, this is horrible price action. So that's it from me for this review. So you get to today. Enjoy it, watch it. This one is a bit more insightful, more packed with content and information. But yeah, hope you guys enjoyed it, and I'll see you probably tomorrow. Have a nice day or evening. Bye.